In this video, Bitcoin and Ethereum bulls are back out and it is their turn once more. We're going to go over some price levels here, but also a massive wide-ranging report from Ark Invest about Bitcoin and ETH and cryptocurrency generally, the growth rates over the past few years, a lot of data points and their predictions for the future as well. A big report, so we'll go through all that in this video. Timestamps are below. Before we get into the report, the Federal Reserve did come out yesterday and raise interest rates by 25 basis points, but it's really the rhetoric. They've changed from their ultra hawkishness, and what Jerome Powell was saying yesterday is what we have done seems to be working. And these are hints to the market to say, you know what, we're not going to crush you anymore, and that is why we're rallying here. We had a really big rally off the bottom, but you can see this move, this kind of melt upwards, otherwise known as a bull flag. These tend to be bear flags as well during downturns, but if you've got the Fed saying, hey, you know what, we're kind of done at this level, then the market is going to rally on a technical basis as interest rates come down and risk is bid up. And this is exactly what we're seeing, this kind of melt upwards right here. In terms of levels, you can see this level right here around 25,000. We also have another target at 27,000 right here. I don't see why we wouldn't hit this as long as some of the other data plays ball. This is for BTC, major midterm target around 30K for that support and resistance. For ETH, as you can see here, we are right at resistance again, so we are very close to breaking through this resistance that we've seen a few times. You can see this melt upwards right into resistance, and again the target would be around 2,000 here. Now ETH withdrawals are happening, but I don't think that's going to be a bearish event as most people see, and so both the charts on ETH and BTC seem to be just melting upwards with more money coming into the market. If you are a trader though, get a deposit bonus on Bybit right here. Come and trade with me up to $4,000 as a deposit bonus via that link in the description, so check that out. The Ark Invest report is wide ranging, but it paints a very decent fundamental picture for these networks. As you can see here, 5 million unique IDs on the Ethereum name service. We have $22 billion in annual NFT trading volume, 127 million in NFT creations. Major brands including Starbucks, Adidas, Nike, Coca-Cola, going into Web3 protocols. I've put ETH-matic here. All of this really is Ethereum and Matic that's going on. There's a lot of growth outside of these, but if you're looking at the big names, especially the American names, they really do seem to be centering on Ethereum, and then Matic is that scaling solution. DeFi is growing exponentially though, and I want exposure to this. $1.2 trillion in DeFi trading volume, up 12x in 2 years, which is insane. And that's in a bear market, 2022 going into 2023, terrible bear market, but you can see that trading volumes on DeFi have held up really well. 9 trillion in on-chain stablecoin transfers, more than MasterCard, Amex, and Discover combined. This is really important because fundamental usage, people actually using these networks, that's what brings in the real fundamental value. You can invest in this stuff. It's not just a speculation. As you can see here, Ethereum is now the 54th largest asset in the world with a revenue of 2.5 billion. How have I set that out? Well, as you can see here on Token Terminal, over the last year, you can see Ethereum has earned around $2.5 billion in fees. Most of that goes back to investors, right? There's no company as such, and so that's really back to you if you hold staked ETH. Visa is the 12th largest company in the world with revenues of 29 billion, but 15 billion earnings. So 15 billion in earnings with ETH potentially got, 10, 20x growth ahead of it. So I think ETH at 54 market cap has a long way to go yet to actually rival, larger institutional players, banks and payment providers, but it definitely can do because this growth, as we can see, is coming through. Ark Invest see a 25x growth in the value of crypto assets over the next 7 years. Now, Ark Invest are the definition of moon boys, and so their valuations are crazy, but let's go through why they think this is the case. Before we do, an update to the crypto course is coming over the next week or so. I'm adding about 10, 15 new videos here, updates and analysis as well. The price is going up during that time, so if you want to get involved, check the link in the description to the crypto investor course. Lots of videos there, private Discord groups that we're all in chatting about this stuff. Why do they think 25x growth is coming? As you can see, according to our research, cryptos and smart contracts could create 20 trillion and 5 trillion in market value respectively. I don't think this, I think it's going to be much lower, but let's see why. What I've done here is you can see the global real estate, global debt, money supply, global equities, gold right here, all much larger than crypto assets. I believe that a lot of these traditional assets will actually be tokenized and put on blockchains. The reason why is because BlackRock themselves have said that. Larry Fink has said he wants to tokenize everything. They're the largest asset manager in the world. They hold bonds and equities and all types of different REITs and ETFs. And it's just a better option to tokenize them because it can enable instant settlement and trade between those assets. It's definitely an advancement of what we do now. I used to trade in the market at T+3, meaning I used to trade with someone on the phone and then not settle the trade for 3 days. Like the money would not leave the accounts and the stock wouldn't come in. That's obviously ridiculous in the modern era. And so all of these assets are going to flow into crypto assets. That doesn't mean that ETH and Bitcoin are going to go up 25x in the next few years. Getting onto Bitcoin data, Bitcoin is fundamentally an extremely strong network and investment. So as you can see here, this is looking at drawdowns from all-time highs. So we obviously got one of those in November 2021, and the drawdown was literally down only for over a year. But if we look at drawdowns from all-time highs previously, what we can see is each of these is getting smaller. So the drawdown in June 2011 was 93.7%. Now the next drawdown from the November 2013 high, 87.7, going to 84.3, and now 76.7. Now that's assuming that 15,800 level, or wherever it was the bottom for this cycle. It may not be. This may be a bear market rally. There may be a massive recession coming in that drives us lower. However, with a recession comes easier monetary policy, and what is Bitcoin? It is a play on that. And so if we assume that was the bottom, it may not be. The drawdown is getting smaller on each occasion of these drawdowns. Important for a long-term investor is that, an investment time horizon is 10 years plus. If you hold Bitcoin from peak to peak, so if you invested at the very peak of the last bull market at 69,000, the average CAGR, compound annual growth, is 160%, and even trough to trough is 150% up. So essentially what's happening is you get the spikes, you get the drawdowns, but the long-term trend is just an upwards long-term trend. And obviously we can see that via what we look at, which is logarithmic regressions on Bitcoin. You have the spikes, you have the drawdowns, but over the long term, this network is just growing in price. It's very plain to see. Bitcoin is extremely volatile, but it is still the best risk-adjusted return asset in existence. This proves it as well. You can see even with the drawdowns, the CAGR is outperforming most other asset classes over a few-year time horizon. And you have to hold this thing for a few years. You can see global equities average a CAGR of around 10% over a 3 or 4 year time horizon. That's really good. There's absolutely no problem with a 10% CAGR. You're going to be protecting yourself from the vast bulk of inflation. That's what equities do. That's why they are recommended, especially for younger people that can handle a bit of volatility. Or if you just invest in the S&P, you're going to reduce that volatility a lot. You can see though that gold, 2.4%, not great over the last few years considering inflation has been so high. But Bitcoin 3-year CAGR is still 150%, 4 years still 187%, despite all the drawdowns that happen. So for longer term investors, if they can just hold throughout cycles, keep dollar cost averaging when the price is below their entry, or when you get down to these levels where it is coming down into the logarithmic regression, that has in the past seen the best risk adjusted returns out in the market. This data though is going to blow your mind in terms of the price where we are now and the fundamental growth and usage of Bitcoin. So what they have here is the data, the fundamental usage and growth data versus ABCD, which are the prices. Now, Bitcoin was at 15,800 back at the tail end 2017, early 2018. That was when it was ramping up to hit 15,800 at the first time. And we have B, the drawdown there. We have C when it crosses it again during the run up to the recent all-time high, and then D, as you can see I've circled, this is where we are now. Well, when this report was made, we've jumped up to 23,000 now, so we're not down at 15,800 anymore. Important, this price though. A previous report from David Puel, who is the inventor of the Puel multiple, which looks at these how miners are profitable. He sees on chain this 16 to 17,000 price level as a major milestone level in Bitcoin. It was major resistance once, and it flipped to major support during this cycle as well. It is a major area where most of Bitcoin's supply has changed hands, and so that often sees during drawdowns, you see, support there, and obviously to the upside, we haven't gone below that as well. So it seems like it acted as support during this mini phase anyway. Now, the difference between A and D, A, the last time we hit the first time we hit 15,800, and D, where we just hit it during this bear market, you can see the Bitcoin hash rate during A in 2017 was 12.6, and now it's 262. That's an insane difference, right? So what we're seeing is a vast amount more of participants mining Bitcoin, making it a stronger network. It shows how fundamentally active the network is and how people want to be a part of it. The supply of Bitcoin last moved a year ago was 44% in 2017. It's now 66.5, indicating there are more long-term investors, which is better for volatility. They're not moving their coins. They're not going to be dumping out or selling. People are holding this thing. Bitcoin addresses with non-zero balance was 24 million in 2017. It's now almost doubled to 43 million. Long-term holder supply was 51, now 71.8. We can also see here as well, Lightning network capacity, really important. Didn't even exist in 2017, and now you have 4,700 Bitcoin in the Lightning network. The Lightning network is a scaling network for Bitcoin, which essentially allows for Bitcoin transactions to be instant and virtually free of charge. This, I believe, is going to be the next, the next reason why Bitcoin sees a massive fundamental growth in users, because now you're opening up Bitcoin transactions to everyone to be basically free and instant, which is a much better use case than paying $6 or $7 and waiting 10, 12 minutes, right? So that is a big improvement. It's coming to more exchanges now. OKX, I think Kraken, a few more are adding Lightning Network transactions in and out, and having Lightning wallets, and having a lot of companies and shops actually start to accept Lightning payments. It is growing. It's bubbling up, and it's very, very important for the growth of Bitcoin to be more successful. There are also other initiatives that are actually trying to put other assets on the Lightning Network, for example, stable coins. And so therefore you have this extremely strong network fundamentally that offers you a long-term store of value if you want that in a cold wallet somewhere, or a payments network where you can exchange either Bitcoin or dollars. And that's essentially what the world wants to do. And so that is very important. Lightning Network's important for me, but you can see that Bitcoin is a different network than the last time we had $15,000 price. And so that's why I was dollar cost averaging at that price when we hit it a few weeks ago. The report also focuses on long-term holders and how they're growing over time. So that is a very easy trend to spot. So the brown line here is that long-term holders are essentially going up over the long term, right? So more people that are investing are holding for longer, which is obviously good for this asset class. What I want to look at is the difference between price action and what long-term holders are investing or doing. So you can see that when price action starts to come down after an all-time high, that's when long-term investors start to accumulate again. So when the price is coming down, and you're not in those crazy bubble periods, long-term investors just start to accumulate coins, looking out to the next cycle. And then, as you can see, we get, we just get some kind of buying in here and a general uptick of long-term investors. As the price comes up to an all-time high again, you can see that they start to reduce their exposure again. So these peaks in Bitcoin after the halving, that's when long-term investors actually just drip out some of their coins. That makes a lot of sense, because if you look at the Bitcoin cycles, the blue line here is the halving. You do get these peaks after the halving, and that's when long-term investors that are accumulating at these lower levels just say, hey, I can let some go here, right? I've made very good profits, 200% in a year or whatever it is. What about this cycle? We can see they absolutely withdrew some of their profits again when we met the last time all-time high. And then here, they've really just started accumulating again. So they're not selling out. And as you can see down at the bottom, they were accumulating again. So this is the cycle as it goes. If you're looking at, well, when should I buy, when should I sell? Long-term investors definitely accumulate as prices are coming down, as you can see. And then they obviously wait till the very peak of that bull market. They do let some go. So it shows us that we are in that accumulation zone right now. Even still, after the recent pump, we're in the accumulation zone. If the halving cycle is going to play out like it usually does, which we should expect, it's the accumulation zone at this point into the next halving. And then long-term investors tend to just take some profits around these peaks after the halving. Ark Invest think Bitcoin in the next 7 years will be worth more than $1 million a coin, which is obviously insane. So let's have a look at this. This is the base case, bear case, bull case of why they think Bitcoin is going to be worth $1 million a coin, which is, it's absurd to me. But they think even their bear case is a $258,000 Bitcoin. So the first one, corporate treasuries, they think their base case is that 2.5% of the value is going to be made up by corporate treasuries. I put this as 0. Yes, Tesla and MicroStrategy do have Bitcoin, but they're outliers, right? Michael Saylor is, crazy Bitcoin maxi. Elon Musk is not your normal CEO. Most CEOs use excess cash to buy back stock and pay dividends, and they don't go out and buy risk assets. And so I believe this is 0. Remittance asset. Yes, I do believe it will be a remittance asset. We're seeing the lightning come in right now, and that's going to change things. How much is that worth? I'm not really sure. Is it 5% of global remittance volume in the next 7 years? Possibly. I know Visa and MasterCard are doing these as well, but I don't know if they're going to use the Lightning Network. 5% seems a little bit high. Nation state treasuries, let's put that at 0% as well, because apart from a few very, very small nations, it's basically not going to happen. Emerging market currency, again, I just don't think that is suitable. You can't have a currency for your emerging market that has a normal 70% drawdown every 4 years. And so they're much more likely going to just use dollars on the Bitcoin Lightning Network rather than, use it as money itself. Caesar resistant asset, institutional investment, and digital gold. I believe these are the strongest use cases, over the next few years before it matures a lot more. In terms of that, I don't think it's going to take 20% of gold's market cap within the next 7 years. Let's put it at 5%. So, is it 250 within the next few years? I would love for that to be the case, but yeah, Ark Invest, I think, are out of their minds with this price prediction, to be honest. Decentralized finance, though, is massive and it's growing. Finance is the biggest sector in the world, and decentralized finance is going to be either directly responsible for growth or just as a background Rails infrastructure for it. You can see DeFi, we basically kept a lot of the bull market growth this time around, right? So DeFi is very strong even in the bull market, even in the bear market. And we could say that with all the institutional blow-ups that we had during this bear market, which were all centralized, DeFi has just proven its case. We also have stable coins getting a lot of traction here. Like I said, I think most people want to, transact with stable coins instead of BTC or ETH, which are more like savings and investments. So I think this is a huge use case that's going to only grow over time. And you can see here, DeFi, this is the DEX market share. We don't look at the volumes as much because absolute volume is going to come down in a bear market as less people trade, fewer people trade. But the DEX market share is important. Even though volumes are coming down, DEXs are bringing more market share over time. And that's good. And that means that blockchains are becoming useful and a go-to product for people to use. Just like with Bitcoin, I think the next phase of growth is Lightning, making value transfer instant and free. The same with Ethereum as well. Ethereum grew so large and the gas fees are insane, right? People paying $30 to do a transfer. That obviously is not scalable, but scaling is coming. And over the next 5 years, it is the growth area and it's so exciting. You can see here, we did have the merge from Ethereum, which reduced issuance. That's just good to return value to shareholders, right? So you can see the inflation right here that we would have had, and now we actually have deflation. That's just returning value to shareholders, token holders, whatever you want to call them. But the layer 2 networks are scaling Ethereum, so this is really important. So we have Arbitrum and Optimism. Active addresses on each grew 11x and 19x respectively in a bear market in 2022 from basically zero though. So Ethereum and Arbitrum and Optimism, as you can see, are essentially what most people are going to use, but they clear down to Ethereum and they actually buy gas on Ethereum. So that's why Ethereum would still have value with those scaling networks. More transactions, higher transactions, cheaper transactions means more use cases and more people. And so you're getting that scale. In terms of daily active addresses on Arbitrum and Optimism, you can see it really growing up. How does that compare to the competitors though? This is focused on ETH. Well, as you can see, BNB chain is still extremely strong with an 87% growth. It's actually the most actively used network over Ethereum, although Ethereum clears a lot more high value transactions. So both have value, either a lot of small transactions or fewer higher value transactions, both have value. Ethereum now has both of this with high value on the Ethereum chain if you want to use that. But as you can see, Optimism here has grown by 1,500%, Optimism by 600%. So when you see Arbitrum and Optimism, they're really customers of ETH. They sit on top of ETH and buy gas on ETH, and they can obviously have a lot more diversified products in terms of DeFi and everything like that. Polygon as well is a competitor to ETH, but it is also going to be a layer 2 as well. So when Polygon release their scaling solution, it will be directly on ETH. And so a lot of that activity on Polygon is going to eventually feed down to ETH as well. One of the major value drivers of crypto, though, is that it becomes money and not just a network equity token. This is something I always focus on. As you can see here, if Optimism and Arbitrum are growing and everyone's using those and everyone's paying 5 cents for a transaction instead of $15, then Ethereum becomes less valuable, right? Because it earns less money and it returns less money to token holders, unless Ethereum becomes money. Now, it doesn't have to become money in terms of world money, but it at least has to become collateral for its system. And so it collateralizes other products. If it becomes collateral and money within its system, it can have a much higher value than something like a network that just charges fees and doesn't become money, right? So the main driver, the main use case of crypto is as money and not as just a cool network that charges some fees. Because if it's a cool network that charges fees, that's basically like a company. And so you'll value it on a price to earnings basis or a price to yield basis, which is okay. They can grow extremely big, tens, hundreds of billions in value. But gold is worth 11 trillion, 10x the most expensive company, because it's a store of value. And so store of value is the most important thing. If you're a very long-term investor and you're looking to grow assets over the long term, and money is the main use case for crypto, this is also important. As we can see, Bitcoin is money, and it's morally sound money. There were no investors in it. It was mined from the start, open, anyone could do it. Satoshi, yes, did mine a lot of it, but he's gone, or they have gone. Now, in terms of Ethereum and Cardano, they're really the only two other networks that could be considered some sort of decentralized asset. The others are just equity where VCs and early investors have all of the coins. That can't be considered money. That can only be considered a network equity token, and they can have a ton of value, tens of billions, hundreds of billions, but they're not money, and they're never going to be worth the same as Bitcoin ever, because Bitcoin as a store of value can be worth tens of trillions potentially. Companies that have insiders that own the shares can never be worth that much. Get your deposit bonus on Bybit via the link below, and the Crypto Investor course is getting a refresh and update. Check that link down there as well. The price is going up when that update comes. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.